Ladies and gentlemen, good afternoon and a warm welcome to our Norma Group SE Roundtable. Some of you might have seen we just recently initiated on Norma, actually on Monday this week, with a very thorough initiation study and a buy recommendation, price target of 20 euros. You can access this study through our research hub, and of course I will also share the link to the research in the chat box on the lower right-hand corner. We think it's a very interesting point in time to look at Norma Group, since the company very recently divested its water management business, making it more of a pure play, and of course also a company with a much more improved balance sheet and room to maneuver also when it comes to acquisitions. The recently announced restructuring program or roadmap to 2028 will certainly also be an issue that we will be talking about in depth today. Deeper insight will be shared with us from Sebastian Lehmann, who is the Head of Investor Relations and Corporate Social Responsibility. A few words on the format itself. We'll have about 30 minutes for presentation time, and then we will enter Q&A. In case you do have any questions, please feel free to enter them also into the chat box on the lower right-hand corner, and we will address them during the Q&A following the presentation. With all this in mind, thanks for your attention, and I will hand it over to Sebastian. It's all you.
Thank you very much, Holger, and a warm welcome, ladies and gentlemen, to this first MWB roundtable from the Norma Group. Today we brought a little longer presentation, as I do not know how familiar you are with the investment case of the Norma Group. I will start with a short introduction on our business model and the strategy going forward. Then, of course, I will touch upon the recent transaction in water management, coming to the transformation program, which has been announced in August, and finally closing with our outlook and our, let's say, glimpse ahead until the year 2028. But let's get started with an overview on our business model. The Norma Group basically is focusing on bringing liquids and gases from A to B at the most efficient way. Now, most efficient in this case means no leakages, no loss in pressure, or whatever high quality connection technology. That's what we are focusing on. We have a quite focused production know-how, which is basically injection molding, plastic extrusion, and metal forming. And with these technologies, we have the claim to fame that we supply mission critical and high quality products at a reasonable price. Now, the important thing here is mission critical. What does this mean? Our products, for example, these metal clamps here, they are quite small. They do not cost so much. Maybe this clamp is about €1, but they go normally into a system which has a value which is by far exceeding the value of our clamp. So, for example, they go into a car, a ship, or a building. Now, whenever there is an issue with our product, if that product fails, the entire system will break down. This means your car will stop, or you will get your basement flooded. So it is not a good idea for the seller of this big and expensive system to use cheap and low value connection technology. And this is why we say we have mission critical products. We supply them at a very high quality and at a reasonable price. So pricing is, of course, always on topic, but it shouldn't be the first topic. And this is how we can generate margins. And we are making our business in, for the time being, 3 strategic business units. But as you can see on the right-hand side, water management with the dotted line around, this has been sold. We have signed the contract at the 23rd of September, and we expect the closing of that deal in the Q1 next year. And we will, of course, touch upon this transaction in a little while. So let's focus on the 2 continued business lines that we have. I'm going to start with mobility and new energy in the middle. That's traditionally the basics or the business where we are coming from. In mobility and new energy, which will be in future around about 70% of our business, we are supplying engineered joining technology for truck OEMs and their suppliers, but also passenger car OEMs and their suppliers. And the split here is about 70% cars and their suppliers and 30% trucks. So engineered in this case means we get very detailed specifications from our customers, and we design the products according to their specifications. We get spec'd in, we get a contract which has on average a duration of 5 to 7 years, and then we are a single source mission critical parts supplier for the respective customer. So we have a direct B2B business here, and midterm we are targeting a margin of around 10%. To be clear, we are not there yet, and how we want to get there, we will touch upon that one in a second. Focusing now on the left side from you, this is industry application. For the time being, this is the smallest part of the Norma group. After the divestment of water management, it will be about 30% of our business. In contrast to mobility and new engineering, in industry applications, we do have a brand business. So this means we do have several brands. Here in Germany, it's going to be Norma. In the US, it might be RG Ray or Breeze. In Sweden, it's ABBA. So we've got different brands all around the globe. And we supply, on the one hand, standardized, but also, and more, also engineered joining technology. The traditional business way in industry application used to be distributors and wholesalers. This is still about 80% of the revenue we generate in industry application is via distributors and wholesalers. So how does it come? First of all, there's a high synergy between mobility and industry application when it comes to production. So we can use the same basic machinery for both product groups. In the past, where Norma Group was focusing a lot on mobility, we have had utilization, for example, for 6 days in the week. And on the 7th day of the week, we are just simply exchanging some tools at the machine, then producing standardized clamps like this one and shipping it to large distributors like Word, for example. So this means it's, I would say, rather easy to handle sales, because you do not have to serve each and any customer of Word, which are thousands and thousands of clients, but just one big distributor. This means quite easy to handle. It's kind of a catalog business. The customer tells you what kind of products he needs, you ship them, and then it's done. So it's pretty stable. It's nice for utilization, but it's not meeting the margin standards where we want to be, which is 15 to 20%. So what we do currently since about 1.5, 2 years, and what we will continue to do, is addressing OE customers directly, especially OE customers that have the need for large quantities of high quality technology. And we will touch upon that strategy in a while, but keep in mind, industry applications for the time being, 80%, which is around 200 million euros in revenues, is distributors, and just 20% is OE business. So that's basically the areas where we in. Now, the Norma Group is present almost all around the globe. We do have production facilities in all major industrial hubs, meaning all around Europe, but also in the US, in Mexico and Brazil, but also in APAC, especially China and India. So this means we are localizing production whenever we see there is a critical mass, because our products are rather small, so it makes sense to localize as soon as possible. Our products, some of them are shown here, but we've got several thousands of them. What you can see in here is simply the, I would say, the comparability between IA and mobility. So metal-based products on the one hand, but also plastic-based, like these quick connectors here, whilst water management is predominantly another type of production. So also, again, one of the reasons to cut that one off, because the synergy with the other two segments is rather limited. Whilst in IA and mobility, we do have a lot of synergies. I already told about the production, but it's also and more about engineering. So we can use and utilize our about 200 engineers in mobility, transfer the know-how into industry applications to serve the needs of our OE customers. And finally, closing with a short overview on our business model, how a world without Norma Group would look like. And it's most probably, at least from our view, not a nice view, because you would probably have to row your boat instead of having a nice ride. Your kitchen may get flooded or your car will stop. So whenever customers try to save the last cent on connection technology, they may risk reputation or image loss, costs for complaints, warranty costs, and so on. So better instead use the high quality and standards of the Norma Group. That's just for the introduction on Norma Group, who we are, what we do. Let's move on to the divestment of our water management activities. And just to start off, giving you a little background on the decision why we sold water management. This decision has been taken about 1 year ago at the 24th of November last year. Previous to that, our management was simply reviewing the strategy and looking on the needs of the company. By that time, we had the strategy that we wanted to grow in both industry applications and water management. However, looking at our balance sheet, it was pretty obvious with a leverage of 2.4 times adjusted EBITDA, there was not any more debt capacity within the company. The stock price was not at a level where we thought it would be a great idea to have a capital increase. So the idea was clearly we need to sell something to generate cash, which we can use to delever the company and invest decisively into the future. We looked at different options, for example, also selling a part of the automotive business. But to be honest, the funds which had to be expected by selling some part of the automotive business were simply too low. So the focus was on water management. As I already told, there were very, very limited synergies between water management and the other two SBUs. Moreover, the inherent value of the water management business has never been truly reflected in our share price. And now if we look on what we've managed to generate, then you see we have received a valuation of $1 billion for that business. This is a multiple of 19.3 times adjusted EBIT. So fairly higher than the Norma Group itself was valued. So we kind of unlocked the hidden value of the water management business. We want to delever our balance sheet significantly with this money that we expect. Then, of course, let our shareholders take part in that transaction and finally grow decisively in industry applications. And we are focusing on what we call New Norma. I will touch upon that one in a little while. So New Norma will have a delevered balance sheet and thus be totally flexible in terms of financials. And we will have a clear strategic focus, really focusing on our core business, building on the historic strengths of the Norma Group and go with a clear focus into the future, targeting double digit after the successful global transformation. Now, here on this slide, we gave some more details on the calculation of gross proceeds to net proceeds. By the way, this chart is available either on our website or in the latest IR presentation, so I will not touch upon every single item here. The main message is the bottom line. We expect that about 620 to 640 million euros will hit our bank account in the Q1 next year. And this means nothing less than 20 euros per share. Now, what do we want to do with that money? We clearly communicated that there are 3 pillars where we want to distribute the money to. The first and most important one is delevering the company. We will pay back debt in the amount of around 300 million euros. If we look into our balance sheet of the 30th of September this year, we were at a net debt of about 326 million euros. So this means after this deleverage, we will be almost at a net debt zero and thus be fully flexible in terms of financials. The second big portion, it's going to be the distribution to our shareholders, which will be up to 270 million euros. As we clearly think we have unlocked the value of the water management business. You as investors, you are the owners of the company. So of course you should also contribute in this. How do we want to distribute the money? This is not finally decided yet. Management and supervisory board will do so once the closing has been done. However, we already gave the first indication. This year's AGM gave us the approval that the Norma Group is allowed to buy back up to 10% of the outstanding shares. So it might be a feasible option that we use this approval almost directly after the closing as a first step. And then in the second step, we will give a proposal to next year's AGM, which will be in May next year, where we will give proposal how to distribute the remaining money on which way and in which time frame. But the time frame will rather be a short one, so we will not carry the money for 1 or 2 years on the balance sheet. And finally, looking at the right side, we said we want to reserve up to 70 million euros coming from the business, from the sale, and use it for value creating growth in the industrial applications area, predominantly M&A. Now, 2 words on that. First of all, when we talk about M&A in the industrial applications area, our clear focus is first of all strategic fit. Strategic fit means we are looking for targets that help us to grow, especially with OE customers, even faster. Second point is the financial fit. The target must be from from an earnings perspective, value accretive. This means that it must be around double digits, so within our target corridor. And thirdly, it must be a target which is on the one hand not too small. So we would assume something below 50 million euros in sale would be too small, but it should also be not too big, as we must implement and integrate that company into our Norma Group. So this means companies with 250 or 300 million euros in sales would be too big. So something in between there, that's what we are looking for. And now if we talk about the purchase price, 70 million euros may look a little bit low at first glance, but then let's talk about the left side of this chart once again. As we fully delever the balance sheet, we will of course get leverage capacity. Now, as we are striving to improve our margin over time, our leverage capacity will go up step by step as our margin will do. So this means we have the opportunity to re-lever the company, to take a debt portion and then plus the 70 million of the proceeds. And thus we will have a lot of financial firepower to do I would say, decisive M&A transaction when there is, once again said, a strategic fit, a financial fit, and of course, the option to integrate that company. All in all, this should build a strong basis to support what we call new Norma, but also, of course, deliver value to our shareholders, which is you at the end of the day. So looking a bit more into the strategy of the new Norma, as I said, there is a highly synergetic core business between mobility, new energy, and industry applications, production, engineers, but also others, of course. And looking a bit more into these 2 SBUs, I'm focusing here on industry application. We want to organically grow via adding, on the one side, new OE customers, fostering product innovations, but also expanding the regional footprint. Now, what's the new approach towards customers here? And that's important to understand. As I told at the beginning, historically, the business was predominantly done via distributors and wholesalers. Now, since about 1.5 and 2 years, we are approaching customers directly, especially by seeking for their, I wouldn't say problems, but let's say issues or challenges they may have. And we succeeded with this approach, and I can give you a few examples here. The first example I can give you is the data center, which we have recently acquired in Asia Pacific. To be precise, it was in Malaysia. That customer had the requisition that they wanted to have 4 power cables with a diameter like my arm. So 4 of them hold by 1 metal clamp alongside the wall and the ceiling of the data center. Now, as it is a very huge data center, this was about 170 kilometers of power cables. Our engineers had a look at that. They came up with a solution within just a few weeks and thus convinced our customer. Because at the one side, the solution itself was, of course, good. And the second point here was we were trusted as an automotive supplier that we are able to handle large volumes at a consistent high quality. So the mobility business that we do was kind of an entrance ticket, as there was no question around, is Norma Group able to deliver high volumes at consistently high quality. And this is also, let's say, a great entrance ticket, which is at another example we recently posted that was completely different business. It was dishwashers. Our customer from the US had a problem with one dishwasher line, which had constant leakages. So customers were buying that dishwasher, had it installed in the kitchen, and after a few weeks, the kitchen gets flooded. Our engineers had a look at that. They took one of our clamps, slightly adjusted it according to the needs of the customer, and then we solved the problem. And with this approach, just solving the problem of the customer, it is always value adding what we do. And if you can add value, price is maybe the second or third argument that you may have with the customer. So it enables to get, of course, satisfied customers, to grow, and finally to generate very decent margins. So we are always in that corridor that which we desire, which is in between 15 to 20% adjusted EBIT. And to give you just a feeling for the volume, this data center had a volume of about 2 million euros in revenues. Now, just keep in mind, as what I said at the beginning, just 20% of our industry application business is with OE customers. 20% is around 50 million euros. Now, if we add 2 million euros in revenues with just one project, that is 4% organic growth in that area. And this is really for us the way going forward. This approaching OE customers directly that need large volumes. To give you that example of the dishwasher, it is 50,000 clamps every month that we sell into that customer. So looking for these customers, solving their problem, and thus becoming more a solution provider instead of just a product supplier. And then, of course, in the middle point here, we are targeting inorganic growth, as I said, with a clear focus on strategic fit, financial fit, and then, of course, the ability to integrate that company into the Norma Group. Now, mobility and new energy, that's the other part where we have a dedicated strategy, of course, implemented. And that one is focusing on rather two things. The first one is global excellence. And in this case, it really means excellence in cost control. Cost control is the major topic in our global transformation program, which will be the next point on the presentation. And then margin expansion. And we do margin expansion by what we call selective order intake. What does it mean? We have, since about 2.5 years, the clear strategy that we only accept new contracts in the mobility business where we have a calculated margin of at least 10% adjusted EBIT margin. So without that, we won't take the business. So this means over time, we will most probably not grow in automotive business anymore, but be rather walking along a glass ceiling or even going a little bit down, but with a clear focus on margin. And now what does this mean in terms of our contracts? Contracts that were signed before these 2.5, 3 years, where we had the focus on selective order intake, they were carrying a margin, of course, below 10%, sometimes even significantly below that, maybe. They will vanish out over time. As I said at the beginning, the normal contract goes like we get the contract, then it takes 1.5 years of engineering, testing, and validation, and then we start to deliver for about 5 to 7 years. So this means these old contracts, they will vanish out over time, whilst the new contracts will over time kick in and thus increase the margin. So that's basically about the strategy. Now let's talk about our global transformation. And the global transformation, someone could also name it a restructuring program, but it's a bit more than this. We have announced it already at the 12th of August, and we were focusing on two major pillars. The first thing is cost cutting in administration. Why this? If you look into the personal cost ratio of the Norma Group, you will see that it is currently at above 30%. Looking back in history, where the Norma Group has had, I would say, slightly better margins, you see that the personnel cost ratio was more about 27-28%. So our administration is currently at a size where we could do some 1.1-1.2 billion euros in revenues. Now with the shift, with the focus on mobility and industry, we are rather in a range of 800-850 million euros. So we need to cut administration decisively. And the second point which we are looking on is the what we call global footprint. So the Norma Group has grown a lot over the last 15-20 years, also by M&A. We have acquired several companies, and with this also several production sites all over the globe. Some of those do not have the, I would say, perfect size or the critical size. They have less than 100 employees, and we are now focusing on optimizing our global production footprint until the year 2028, and I will give you some examples in a second. Overall, and these figures have been presented at the 12th of August, we are shooting for savings on average of about 40 million euros a year until 2028, always compared to the base year 2024. And on the other hand, we will, of course, have costs for that. And the vast majority of costs will occur in the current year. You see it in the upper right. It's about 30 million euros, which we estimate. The vast majority of those would be accruals for garden leave payments to employees, which are supposed to leave the company next years. Overall, we are planning to reduce the global headcount by about 400 people, 70 of those in Germany, and this is where, of course, costs occur. Looking a bit ahead, just keep that number, sorry for this, just keep in mind the number about 40 million euros in the midpoint should be annual savings from 2028. Now, I want to give you some examples on the footprint measures that we took. The first one is referring APAC. First question, of course, why APAC is the first? It's pretty easy because the, I would say, labor law is not as strict as it is in other regions. So you can pretty easily do these footprint measures, which we did. So looking into China, which were the first measures, beginning of this year, we had 4 factories in China. 2 of those were not at the critical size of more than 100 employees. So what we did is we have transferred machinery, materials, contracts from 2 smaller factories to 2 bigger existing factories. We have thus optimized the flows of materials in the existing factories, but also, and this is important for your background, all production sites at the Norma Group are own legal entities. This means they have their own local management, or own local HR, finance team, and so on. So what we did is transfer machinery, transfer materials. We kept the business, but we cut off the administration costs, and the result is seen on the lower right. So from next year on, we will save about 1.8 million euros per year by cutting about 50 headcounts. In Australia, we have closed 1 distribution center. And also a good news for me personally is what we did in India. India was not about cost saving. India was about optimizing our production layout. So we had a clear look at our production layout. We have optimized all rooms, not only within the production, but also within the administration. And we thus generated about 700 square meters of additional production space, which we can use for future growth. And as India is, for the time being, the fastest growing automotive market, we are clearly expecting growth to come from India over the next years. So without additional costs for a new factory, we have now generated 700 square meters of additional production space, which can be used for that growth. So that's about APAC. And by the way, if you look into our Q3 numbers, you can already see the effects. APAC has generated an adjusted EBIT margin of 10.3% in the 3rd quarter of this year. So what you see is the Norma Group is generally able to generate decent double-digit margins, even in the existing, I would say, muted economic environment, and also with about 70% automotive business, which is also in APAC the case. Now looking at the next step, which will be in the Americas region, specifically in Mexico here. In Mexico, we currently do have 3 production facilities. 2 of them are producing metal goods. And what we do is we have rented a new, very modern factory in Juarez, and we will move our existing metal production from Tijuana into that new one in Juarez. And in the second step, move the old factory in Juarez to the new one, and thus have a very optimized, very modern production layout, which will help us to save about 1.2 million from the year 2027 on. Now we have talked about APAC, we've talked about the Americas. For sure, there is more to come. But we have a clear policy that we always and first talk to the respective employees or the Works Council before we go public with any more information. So stay tuned. What we will do is give updates from time to time whenever we have something to tell. But keep in mind, we do have a plan until the year 2028. Now, finally, before we come to your questions, let me shortly give an outlook on the current year, explaining a little bit the background of that guidance we gave, and then giving a kind of a glimpse of what is to expect until the year 2028. The current year guidance is that we want to do or generate group sales of around 810 to 830 million euros and a margin of in between 0 to 1%. And I will touch upon that point at the next slide. Net operating cash flow, and please keep in mind this is for the continued but also the discontinued business combined, is expected to level at around 75 to 95 million euros. And of course, we keep up with our speed in the ESG sector, targeting CO2 avoidance of about 1,000 tons of CO2 equivalents. Now, we've got frequently been asked why our margin guidance for the current year is so low at the first glance with 0 to 1%. And for sure, there's no question around this is not satisfying at all. To give you a bit more background, we have presented this slide to our investors with our Q3 numbers. And what we had this year were some specific one-off costs, which occurred only this year, and we have not adjusted for those. And these are specifically, first of all, the CEO change in February this year, where Mr. Grundy left the company. The good news clearly is with Birgit Seeger, our new CEO, joined the company at the 1st of November. So the board is completely staffed, and we are happy to have Birgit on board, as she will, of course, decisively drive the future of this company. So nevertheless, there were some costs which will not occur next year again. The second and largest portion is about the what we call Maintal D365 implementation. It is all about the implementation of an ERP system at our main facility in Maintal, which is close to Frankfurt in Germany. This is, by the way, the largest factory the Norma Group operates and also one of the oldest with more than 75 years. So what we experienced here was that the implementation of the ERP system caused several issues, especially in the change management. So what we needed was, first of all, more IT consultants costing about 3.5 million euros. You see it at the top right. Secondly, we needed to bring in some colleagues from other Norma Group facilities which already implemented successfully that ERP system. They came over here to Germany. They helped and trained the workforce here in Maintal to kind of cope these problems. And then a large portion, about 5 million euros, is for so-called special freights. Special freight means, in this case, normally we sell our goods ex works. This means our customers pay for the transport. Now, whenever we are not able to ship the right number of goods at the right time, our clients, of course, tell us, Norma Group, get these products until that date to our premises. So we need to employ, or we need to order logistics, in this case, express logistics, which is, of course, meaning smaller batches, which are transported at higher costs. So these 5 million extra costs occurred. Overall, 12.5 million euros in this year, which should clearly not occur next year once again. And the third thing we did not adjust it for is a customer-related topic. One of our largest customers in the EMEA region suffered a cyber attack in September, and thus the entire production in Europe was on hold until the 9th of October. so for more than 1 month. We are doing 4 million euro revenues with this customer every month. So this means 1 month of production loss means 4 million less revenues. That customer is now resuming production, but it's still at around 50%. So we will lose further revenues until the end of this year, and thus at least 2 million euros in EBIT. In total, these are 16 million euros of EBIT, which will be lost by these one-off effects. We did not adjust for those. If we would have adjusted for those, the margin would be rather 2 to 3% instead of 0 to 1%. So that's giving you some background on the current guidance for this year. And looking ahead, how do we want to get to the desired double-digit margin level? And this is shown at the next slide. We start off with these, let's say, not adjusted one-offs, where the margin would be rather in between 2 to 3% this year. Then we have our global transformation, as I explained, midpoint 40 million euros until 2028. And on top, our COO has made a clear plan to bring another 10 million euros of savings effects in the Maintal plant on top of this recovery of D365 implementation. So if you do the mathematics, you start here with a 2 to 3% margin, which is a midpoint 20 million euros EBIT, add another 40, which is then 60 million, and another 10, which is then 70 million euros. 70 million euros at a revenue of 800 to 900 million euros is already at a high single digit. And how do we want to come to the double-digit margin? Well, there are three main pillars. The first thing is we want to and we need to organically grow our industrial application business, as I told you, with very healthy margins. You will find some examples on the right side with the press releases. In Mobility New Energy, I explained about the strategy to kind of do the selective order intake. And finally, we are, of course, striving for M&A opportunities in industrial applications. And thus, and in total, we want to come to a double-digit margin until the end of 2028. Now, coming to the end of the presentation, our vision until the end of the year 2028 is that the new Norma should become a what we call industrial powerhouse. And this means for us that we have a very strong market position in industry applications with high growth prospects. In the mobility sector, we will become highly competitive in terms of pricing with a lean and cost-adjusted organization and an overall globally streamlined manufacturing, logistics, and distribution network. This all should build the base for very strong financials and, of course, a sustainable attractiveness for you as our valued shareholders. And with this, ladies and gentlemen, I'm going to conclude the presentation. And now I'm really looking forward to receive and answer, of course, your questions.
Thank you so much for the insights and the roadmap, Sebastian. We do have quite a few questions, and I will start out with one that came a little off left field, so I kind of want to address it at first. And it's concerning the factory in Juarez and why it was only rented and not bought.
Yes, well, that's clearly an operating question. I would say generally buying a factory is quite expensive. If you look at our general capex ratio that we have, it is in between 5 to 5.5% of revenues, and we want to keep that range for us. So from an economic perspective, it was feasible to rather rent that factory instead of buying it.
Thank you. One of the key pivoting points of your story is the sale of the water management business, quite obviously. And there were a few questions addressing that. One of them, and I don't think you mentioned that, the timing, when is the official closing of the deal expected?
Yeah, thank you for that question. The timing, so it is expected at the first quarter of next year, so in between January to March. For the time being, and just to give you that background, it is highly dependent on an antitrust proceeding in the US. So as you will remember, we had kind of a shutdown in the US for 6 weeks, so authorities were not working. This means it took a little longer, but our lawyers already expected that. So we just talked to them, and they still expect that the closing will take place in the first quarter of next year.
Okay. And of course, one of the key questions is what could go wrong, i.e. you've already mentioned the antitrust authority that has to wave it through. where do you see potential risks of the deal not going through? And is there a potential breakup fee involved?
Good question. So first of all, and that's clearly the good message, the buyer and the seller, we all want this deal to be closed. Yeah, first point. Second point, of course, if antitrust will not allow that, this could be a breaking point. Nevertheless, neither our lawyers nor the lawyers of the buyer expect that, because the buyer is 10 times bigger than we are. Nevertheless, we are in a field of water management active where the buyer is not active in. So we are not in direct competition yet. And this means, or this is the main argument from the lawyers why they say it should pass the antitrust proceedings. However, if there would be, and we do not expect that, but if there would be a breakup, then yes, there is a breakup fee, which will at least cover all costs that we have at the Norma Group.
Okay. Another follow-up question in this regard is, of course, it is a different business unit, your water management business, but still, I'm sure you need to do some carving out of operational business and separation between the businesses. Are there any risks involved that this might not be done by closing, or are you confident and have progressed so much that you're very at ease when it comes to this?
Yeah. So at ease, I would say we are at ease when everything went well. So that's what we are aiming for and what we are working on. But there is not a high operational risk. The good thing here is that the production sites of water management are all on their own. So this means we do have 2 production sites in the US, one in Malaysia, one in Italy, one in India, and they are all completely apart from mobility and industry applications. So we do not have the, let's say, issue that there is one factory where we produce goods for all of our 3 SBUs. So nothing to carve out from that operating business. It's more about carving out the financials, carving out, of course, the IT landscape, purchasing, so all the overhead. That's the bigger part of the carve out.
Thank you. That addresses all the questions related to this issue. Let's continue with your guidance for this year and your, let's call it the Vision 2028 that you're having. One question is regarding the updated outlook for 2025 and the key levers to strengthen profitability. I feel like you've addressed that mostly already with the one slide that you were talking about. And I guess we can skip this unless there's anything else that you would like to add.
Well, I think you're right. We address it. If not, if there is, and this is, of course, an offer to all of the listeners to this call, if there are any questions left, please feel free to contact either me or the IR department. We are happy to support whenever there are questions open.
Great. Looking at the 2028 roadmap that you're having, you were talking about in IA that you are trying to tackle OEMs rather than the wholesalers. And I assume that's because direct business carries higher margins than going through a wholesaler. Do you have an idea of what the margin differential could be roughly on the one hand, and on the other hand, since you have to get close to the OEM and you have to maybe develop a product specifically for them, costs initially and costs might be higher, margins lower, and the contract amortizes with higher margins over a long period of time. Can you give us an idea how that fits together?
Yeah, so first of all, and to make that very clear, we will not, let's say, neglect the traditional business with distributors and wholesalers. We will keep that business as it kind of gives us stability on the sales line. Addressing the OE customers has, I would say, 2 levels. And I mentioned these when I talked about the dishwashers, for example. That's a longer lasting contract where we supply constantly 50,000 clamps every month. So a very nice contract with very decent margins, at least in our desired margin grid of 15 to 20%. The initial costs are not that high. Why this? Because I said we took an existing product of the Norma Group and just slightly adopted it. So it took to be honest, I don't know if it was 20 or 40 engineering hours, but it was not 50,000 or even more euros in costs for developing this solution. It was rather a very small amount, but we solved the problem of the customer. And that's what it's all about, solving the problem of the customer. And when you do so, you are releasing the pain point of the customer. And this means when you solve the problem of the customer, he is willing to talk about the solution. He's willing to talk about delivery. He's talking about quality, but the price is of course a topic, but it's not the first priority, because we add value to the customer because we solve its problems. And this is why the margins are generally in this, I would say, project business, very decent without giving any definite figures here.
Thank you. Let's stay with the Outlook 2028. What are the challenges that you see and the risks that you see in this guidance? Because it is a little bullish, of course, it needs to be on the one hand, but I'm sure there are some risks on the not only implementation front, maybe also on the macro front, because your end markets are partially quite cyclical in nature. Can you illuminate a little bit on this?
Yes, for sure. So I just switched back to that slide with the outlook. Hopefully you can see it. So where are the risks? I would say, or the challenges. One challenge, of course, is within the global transformation. We have to deliver on the promises. The good thing here is this is not simply, let's say, a number that we gave. It is a clear program that we have set up together with an external specialist who is focusing on these transformation projects. This means it is duly calculated. Now it's all about execution. And so the risk, if you want, or the challenge is within execution. We must execute, and this is why we give these examples of the footprint projects. This is why we give more transparency whenever we can. Like we told initially, not about the number of headcounts we want to reduce. Now we can openly talk about these 400 headcounts globally, 70 of those in Germany. And this is really for us the strategy to give you a better feeling that we are really delivering and execute on what we have planned. So I would say this is that what we have in our own hands. And of course, you are right, the end markets is something we cannot influence. The, let's say, rather good point here is we are already, especially if we look into mobility and more specifically into the truck business, we are already, I would say, rather at the bottom of the cycle than on the top. And first truck OEMs, naming just a German one who just gave, I think 2 days ago, a quite or a slightly more optimistic view on at least 2027. So what we see is that the cycle in trucks is supposed to get better by the end of next year, beginning of 2027. For passenger cars, it really depends. It's a highly volatile business, you are right. So we are at the end, depending on the end customers. However, we are at kind of hopefully the end of the down cycle. So we are talking about 2028, which is still 3 years to go. So yeah, some market recovery should also be supportive to that plan.
Thank you. Focusing a little on the industrial applications, what's the innovation pipeline like that you're having? And looking at the long-term growth and differentiation, which technologies or solutions do you currently prioritize?
Oh, this is a very, very, I would say, very wide question, as it is addressing several topics. Maybe I try to get it from another point. First of all, we are generating about 25 to 30 patents year by year. So what we really do is research and development on our own, and we have currently more than 700 patents at the Norma Group. There is not a specific technology in industry applications what we are focusing on. It's more about transferring existing know-how from mobility into industry application. And I can give you one example, which we have given with our Q3 numbers. And this is, we took the know-how coming from electric vehicles, where we supply these plastic quick connectors, and they have normally a plastic tube for the thermal management system in a battery. So we have transferred that know-how into battery electric storages, or so-called BESS, and we supplied a thermal management system for a very large battery storage system. So taking the existing technology from automotive, slightly adopted to the need of the customer, and then deploy it at battery storages. And if you look at the market with the renewables, the necessity to deploy more and more battery capacity is clearly there. So this is a growing market, and we are really focusing on this market where we see growth potential for the future. Battery storages. We talked about data centers. We have not touched upon heat pumps, another point where we implemented our plastic connectors into a heat pump and thus replacing copper within the heat pump. So reducing weight, reducing cost, reducing installation time, and thus bringing value add to the customer. This is what we are focusing on, but it's not about one very specific technology.
Thank you. You've already talked quite a bit about potential acquisitions and the criteria for them. I remember you talking about strategic fit, financial fit, and how well they are or how easy they are going to be integrated within the Norma Group. Is there anything that you would like to add? Because we had, before you addressed the slide, a question on what criteria Norma Group will apply. Otherwise, I would say we've already addressed this well enough.
Well, not any more criteria, but to give you more kind of feeling where we are in that process. First of all, we of course laid our strategy in industry applications. Then we had, I would say, a very well-known consultancy called Roland Berger with us to help us to kind of streamline the strategy to see, is it really the right thing to do? So we have finalized the strategy together with external experts, and based on that, together with Roland Berger, we have defined potential requisitions on a target. And based on that, we have built up a long list of potential targets. And now we are already in the phase where we, together with external partners, are approaching these potential long list targets to see, first of all, are they willing to sell? Secondly, if yes, are the criteria, strategic fit, financial fit, and so on, are they met? And then the next steps would follow, but we are just in the phase of kind of see what kind of targets are available and do they really meet our criteria. And this is why we expect that a transaction will be, if at least, more in the second half of next year, but definitely not in the first half.
Great, thank you. Talking about the use of the proceeds that you're getting from the water management business. Now you've, on one slide, in much depth explained how you're going to use the proceeds. One question was why you're not using it all to build up and acquire in the industrial applications business if it is a very promising business. I guess we've addressed that quite in depth already, so I would just skip this in the interest of time and would like to go to the other part of the equation, usage of funds, and that's return to shareholders. Now, if I recall correctly, you used a number of 250 to 270 million that you would like to return.
Correct.
There are two comments in this regard. One of them is that if you pay out dividends, at least to German shareholders, you do have the source tax that you're paying, which is 25%, which is going down the drain for us. On the other hand, if you do a share buyback, that might be from a tax perspective more benign to German shareholders. That's the one part of the equation. The other part of the equation was if you do a share buyback, and given the amount of money that you want to return, and granted your share price might increase, so the number of shares might decrease that you can buy for the money, but in general it could be, and the wording used here in this question is could be a never-ending story. And if it wouldn't make sense to actually do more of a tender offer situation, and if so, what percentage could be repurchased via tender? Is it 10% or could it be more?
Okay, very, very good questions. Let us start with the first part. where we were talking about the dividend versus share buyback. You are totally right. A dividend will cause taxes at most of the receivers of the dividend. We have that in our mind and we take care about that, or it is part of our, let's say, decision process. And I will give you one more point here, that we are looking also at valuation. So looking at the current share price of the Norma Group, at least we think it's definitely undervalued. Just keeping in mind 20 euros per share of net cash are flowing in Q1 next year. We are currently at around 13 euros. Does it really make sense? I mean, you as investors have to decide, but we clearly see our company as undervalued, which is why a share buyback at this level of valuation at least seems to be more appropriate. And the second point was about the timing. Well, tender offers are possible, and yes, there are also instruments that allow us to buy back more than 10% at once. Let's say we are in the phase of investigating all different possibilities, but please keep in mind what I said at the beginning where I talked about this distribution to shareholders. It is the clear intention of the management to not keep the money on our bank account for 1 or 2 years. So this means we are really targeting on a, I would say, tax efficient, but also quite quick distribution to the shareholders. We will not wait for the next 2-3 years that to distribute the money. So there will most likely not be 10% share buyback after 10% after 10%. This seems not to be appropriate in terms of timing and so on.
All right, we've pretty much exhausted the hour that we allocated to this call. Sebastian, thanks so much for the insights that you've provided us. I think it could be a very interesting inflection point into this story. Once again, if any of you have questions regarding Norma, Sebastian and his team is more than ready to help you out. And of course, feel free to contact us as MWB Research and our analyst on this case. I wish you all a great afternoon. Thank everybody for attending and the great questions that you put into the chat, and we'll see each other next time. Sebastian, if you wouldn't mind staying on the line for just 1 second. Everybody else, have a great afternoon. Thank you so much.
Thanks, everyone. Have a nice day.